How you doing, everybody? This is Max Farrell from Dex FX Markets.com. And in this segment is a little bit unusual. It says StepBot results compounding, and it is. But secretly, I'm here to kind of talk to you about something very touchy. And it's the act of compounding, but for your future with your investments, which I'm not allowed to tell you what to invest and where and all that kind of nonsense. But I'm going to give you an overview of what I'm about to do and what I'm already currently am doing within my future world. Now, we can talk about a few things today. Before we do, we got to talk about, we're going to discuss the disclaimers, of course, but we're going to talk about, why this isn't considered financial advice and why you have to be very careful. But if you decide that you want to move forward, what you're going to physically need to make this all work for you is time and patience. And that's something I know a lot of us don't have the luxury of. We're also going to be talking about it's a set and monitor system. So you will have to do work. You will have to monitor your system at least once a week, calculate your gains, and prepare yourself for withdrawal for a particular time or no withdrawal from that solution. But each has its own mentality. And then you have to prepare for financial maintenance, which means that you're going to be paying along the way from things that you're gaining from that you may not be able to withdraw from. So be prepared that there's a whole different mindset about to come for you. Let's talk about, before we talk about compounding or not to compound, I have to kind of show you the disclaimers. This is the U.S. government required disclaimer. Stocks, options, binary options, Forex, and future trading has large potential rewards, but also a large potential risk. You must be aware of the risk and be willing to accept them in order to invest in the stock, binary options, or future markets. Don't trade with money you can't afford to lose, especially with leveraged instruments such as binary options trading, futures trading, and Forex trading. This website is neither a solicitation nor an offer to buy or sell stocks, futures, or options. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on the website. The past performance of any trading system or methodology is not necessarily indicative of future results. You could lose all of your money fast due to poor market trading conditions, mechanical error, emotional included errors, news, surprises, and earning releases. Now, it's important because I hate reading disclaimers. I think we should be able to talk to each other like real people without all this disclaimer indicative of future results bullshit. But let's be serious. It is true. You could definitely lose all of your money if you're not careful. If you over leverage yourself or you try to do this with just a couple of bucks instead of the required amounts, the monies that you should have in there. If you try to pull too much money out too fast, you could end up hurting yourself and leveraging yourself out, creating yourself a spiral of losses. We don't want that to happen. So let's talk about compounding or not to compound. This is the question that we need to answer. Let's go have a look at some StepBot's results before we get started, though. Now, we're joined here on the MyFXbook account, and you can see this is a real account. This isn't some photoshopped system in here, okay? This is a real, and it's a live account. We use Tickmill. It's an overseas broker, but this was somebody we were just testing with. We didn't want to tip off a whole bunch of U.S. regulation stuff. We just wanted to see what was available, what it could do, and we left it on here since May of 2018. But we have other ones that we have tested on. We have bigger accounts with. I'm not going to bother showing you all that because it has a lot of variable changes and things in there. But the overall success, this is the most consistent value over a 12-month period, almost 12 months right now. And it doesn't show any signs of weakening. We had one bad day of equity drop in that process over what we call a drawdown, which got to 16.4%, but that's still even really small compared to some of the bigger accounts out there. The reason why it drew down so much is because we forgot a variable, and one variable kicked out on one of the pairs, and it made us drop. This was on June 26th of last year. Now, when we made this bot, we made it in such a format that we called attention from a strategy company, and that strategy company came to us and asked us if they could run the data on this bot, and we said sure, because I didn't think that I had what it took to run the data to the extent that we needed to do it. And what kind of data are we talking about? Well, one, we're talking about a back test that has 17 years worth of data in it. Two, a forward test that right now, this is not real. This is only one of the 4 tests. We have one forward test that is sitting at 2 years on the demo. Okay. And then we also have another one that's 1.6 years on the live, which is another live account that looks like this. Okay. And it sits right at 11% on that one because we drew down on a few. Again, we had this draw down on the 26th to hit all of our demos, of course, where we were testing on multiple different pairs. But the big one here is the one that's sitting in front of you. And why is it so big? Well, simply enough, it is the most consistent bot I have ever seen. That's it, plain and simple. It's the most consistent value of growth that I have ever seen. Sitting at 12.45%. So we're going to drop this back down to an average of 12%. Now, does it have 12% every single month? And the answer is no, it doesn't. That's not what, this is the average monthly fee. But if you look at this, watch what happens. 8, 5, 9, 10, 10, 11, 12. Some months it has like in June, 24%. We will get these big months in here, and we will get a small month. But the average should come out to be for the year about 12%. Now, overall for the year on a percentage that it's made, you're looking at about 221% on your money per year. That's pretty damn good. All right, so the idea here is also this is only at 12% at the value that it grew because we kept a single micro lot on board. Why is that so important? Well, because we're starting off with 0.02 microlots on our main system. If we go over to our bot system over here, we only grew because we had 2,000. We had $1,000. If you think about it, we had $1,000 on that system running, and we have 2,000 on this system running, and our monthly is 6. So on 2,000, if we push the numbers really well, we should be growing about 12% easy in that process. Now, here's the thing. Let's go back to the other one. If we just average out 12%, just 12%, that's all we're looking for is monthly gross. Okay? We're just looking for 12% on this compounding growth. Okay? And that's why it's so cool, is that if we do this right, our increase in amount will go even further. And I want to show you what it looks like. If you take, what does 12% look like growing over a 5-year period without us touching it? And if we compound it, if we continue to roll the profits back over into the solution, what does it look like? Well, now, welcome to our 5-year plan. Now, again, anything that I show you in here is all speculation, and it's derived from the information and the data that we have right now. So don't go willy-nilly and weak in the knees if you see this number up here, $1.7 million. It is possible, very, very possible. So why do the numbers work so well is because when we bring in the amount of 12%, that's at the lowest rate possible on the system as far as the average for the year. So we're just sort of averaging out the year broken back down in retrospect of each month. Okay. Now, will you make $240 your first month? No, you may not, if you put $2,000 in. But the point is that on the average, this is what it should come out for the year. At the end of the year, what would you look back on the average on? And that's why we're going to do in this plan. If we kept it in for 5 years, always continuing to grow at that 12%, because what we're doing is that for every $1,000 at that 12%, we're increasing 1 micro lot, right? Remember, there was a micro lot that's used here, and at 1 micro lot, we gained 12% average per month. Get what I'm saying? So if we increase the value the same way on the step bot on the plan, then these numbers should remain pretty true on the average for the year. The biggest number at the end of 12 months, what you should be making is between that $5,700 right in that area, right? That's the big number. And if you compound that backwards, then it does whatever. Now, if the first month you made $240, now this may, if it was $1,800 or $180, it doesn't matter what it is. What it matters is that on the 13th month, what do? Do you draw money off or don't you? If you compound this thing over a 5-year period and don't even touch it, just set and forget it, you're at 1.7 million. Why? Because we're increasing the value of the compounding by adding the profits back in and not touching a single cent. What that means is that over a 60-month period as well, your expenditure to keep this thing going about 147 bucks a month. That's with $97 a month coming in for the bot and another 20 something, 30 something bucks on the server. So you look about 8 grand per year, right? Or for the 60 months, I'm sorry. So 60 months, about 8 grand. I think that's an expenditure worth having for 1.7, don't you? You're still at 1.7, you're just 1.79 or 8.87. So that's not too bad. Now, what does it look like if you're like, well, Max, I don't think I could wait 5 years to get some money out. I need to make money. Listen, if you hunt out $2,000, that's set and throw away money, like that is like disposable income, you know, if you find $2,000 of disposable income to do with that process, doesn't matter anymore. If you just let it set and let it do what it's going to do, doesn't matter anymore. You're preparing for a future, for retirement, or for whatever. It doesn't matter, does it? Even if it does happen to for some reason fail, and is it worth the risk to give that a shot on a company that is transparent and honest and giving you everything that they got to move forward? We took 5 years to build this thing. Yeah, I think it is. So let's look at another aspect of this process, and we call this the 5-year with the withdrawal. All right, now remember the number, 1.79. Oops. What did I do here? I was wondering what I did wrong here, but I started with 12,000 instead of 2,000. Let me do that. 2,000. There we go. All right, so with $2,000 starting, again, remember the 240 right in the beginning, right? 12% average for the year. On month 13, we take out the $240 we originally got from that first month, right? And this is with a withdrawal program. And then on month 14, you withdraw out to 268. You see, it kind of makes sense, right? Boom, boom, boom. All makes sense. And the idea here is that as the percentage stays the same, the growth of the first month grows to a level that you can afford to pull out without affecting the bottom line too much. Now, how much does it affect the bottom line? I say pretty high, right? Of pulling money out. Now, if you want to keep low key, you don't want to keep a lot of money on the system, and you want to make about 200, what is that per, per year? It's about $164,000 per year at this point, right? And if you decide at that point that you withdraw everything that's above your $205,000, anything that's above that $205,000 for the rest of your life, or however long we keep the bot on, we're keeping it on for 5 years for our own plan. And at the end of that 5 years, what happens? Well, we may just distribute the bot to everybody the way it sits. There might be new advances in technology, and who knows at that point. The concept's still the same. What does your 5-year plan look like? If you can afford to live on about $4,000 or $5,000 right here, this is the level that you would stay at, about $100,000. Withdraw everything over $100,000 every month, and just live off, $5,000 or $6,000 a month, keeping it very low key. But if you're shooting for the moon, shoot for the moon. Can you wait? Two different types of mentalities, right? Set for retirement compared to make some money along the way. Handle the expenditures. Get to a point where retirement may be, okay, I'm making about $6,000 a month on this. So it's pretty powerful. All right. So 2 more things to do, and then I'll let you go. One is that we look at a 10-year plan. Holy crap, even with a withdrawal, that's a pretty damn good 10-year plan. And if you're making about 10, 11, 12, 13, oh, look at this. This is incredibly stupid now. The 10-year plan, you're making about $409,000 a year. Or a month. Sorry, that's a month, by the way. $409,000 a month. That's just too much to play with, right? And now let's go look at big numbers on the withdrawal. If you decide that, or not the non-withdrawal, if you decide that, hey, you know what, Max, let's just say that I got $5,000 to start with. Doesn't seem like it's fair, right? So at $2,000, it's 1.79, right? So wouldn't it be like 34,000 or 3.4 if we did 4,000? No, that's not how math works. Not in this case. Pretty wild, right? Now let's just say you did something like $12,000, like one of my founders said he wants to be able to do. This is at the end of 5 years. Now what if you wanted to do that on a withdrawal system? Yeah. How fast can you get to a point where you can live off $6,000, $7,000 a month? And right around month 27, you could start drawing everything over $150,000 every month, because you'd be pulling in about $7K every month at that point, within reason. Now, as a wrap up, let's recap. 13-month plan versus no withdrawal. Well, I suggest for myself to leave the money in there for the 13th month if you're going to do the withdrawal. This will put it all into a point that you'll be a long-term gain instead of a short-term gain. That first withdrawal of $240 is really going to be different in a tax bracket too, because it'll be a long-term gain compared to the high-end short-term gain tax. This would give my balance also time to grow within that 13th month. But for me, I'm in for the long haul. So for me personally, I probably set and forget money that was in there and just let it grow. Now, the more you start with, the more and the bigger risk there is, because you have to look at, broker regulations throughout the world, what brokers you're going to have. You got to understand what the money in, money out path is. If I put $2,000 in with my debit card or my credit card, then I need to make sure that I'm prepared for that money to go back to that card from original. So in 5 years, you need to make sure that the same path you put money in is that how you're going to take money out. And then once you equal that amount that you first put in, you're going to have to make sure that you can get the withdrawals in timely. I wouldn't try to keep too much money in one spot. Do this over 3 or 4 different brokers if you have to over a period of time. Test these waters out. Help me get to that point of figuring this process out. We don't know what we don't know yet for the future. We're only about 1.5 years, 2 years into the live side of it. And the numbers we never compounded the numbers. We just kept on just letting the numbers grow to what they were doing at the lowest rate. We didn't compound the numbers up as it grew. And if we did, who knows where we would be, right? From that point. All right. I'm going to let you go. This has all been about compounding and looking at the 5-year plan. I hope this finds you well. I'm Max Farrow. This is DexFXMarkets.com. And as always, trade well.